We're going live in three, two, one.
Hello, everyone. Welcome to the iCFO Capital Global Virtual Investor Conference, San Antonio, Texas. Thank you for joining us. For those joining us for the first time, my name is Jessica Santos, VP of Administration at iCFO Capital Global. It is an honor to be here today with the country's best investors, investment professionals, and top executives who will future game-changing technologies and innovative business models across multiple industries. In addition, we have several exciting companies presenting their opportunities. But before we start, I want to thank our presenting companies for the tremendous effort. Thank you for the opportunity to serve you. I want to thank our investors for all the years of support and for being part of our vision. I thank my team members and our iCFO Capital partners for making this event possible. I want to thank Chris Tetzi, founder and CEO of iCFO Capital Global. Robert Rees, VP of Operations, Johnny Rivera, Account Manager, Carlos Garcia, Account Associate, Mia Tetzi, Administrative Assistant, Edgar Park, Legal Counsel, Gilbert Ochoa, Executive VP, Peter Morgan, Administrative Assistant, Vanessa Nieto, Human Resource. I also want to thank our general partners, starting with Michael Lerma at iCFO Newport Beach, Mary Lou Garcia at iCFO Beverly Hills, iCFO La Jolla with Jack Cohen, iCFO San Diego with Bruce Blackman, and Philip Bradley as Executive VP. Stephen Lee at iCFO Scottsdale, George Mena at iCFO Palm Springs, iCFO Florida with Bob Lucas, iCFO Hollywood with Star Hollis, iCFO New York, Jocelyn Jambao, and iCFO San Francisco with Bernard Picot. So what is next for iCFO Capital? We are pleased to announce that iCFO Capital Global will be launching iCFO Asia, which will include Singapore, Hong Kong, and Jakarta. I want to take the opportunity to talk about iCFO Capital Global. We are an investor relations firm that provides entrepreneurs and early stage companies with critical access to our capital resources by bridging the gap between entrepreneurs with investors. We represent over 4,000 private investors who invest in a wide range of capital sizes. Each month, we host several virtual investment conferences throughout the country. These meetings bring accredited investors, family offices, VCs, PE, fund managers, and investment professionals interested in pre-qualified investment opportunities. iCFO Capital Global provides a complete investor relations service by prospecting the right fit investors and qualifying them so you can close your deal. Thank you for our 5-minute commercial. Please enjoy the conference. At this time, I would like to introduce you to Robert Rees, Vice President of Operations at iCFO Capital Global. Robert has a combination of 20 years in running a sales and marketing business in Latin America. Mr. Reese has worked closely with various industries, including consumer products, health and beauty, regulatory, business development, and market analytics. He has developed and presented plans for product positioning, packaging, and price strategies to produce the highest possible long-term market share. Mr. Reese has attended Universidad Autónoma de Baja California and earned a bachelor's degree in business administration. Ladies and gentlemen, let us welcome Robert Reese.
Thank you, Jessica, for that kind introduction. At this time, I want to welcome the investors and investment professionals, the presenting companies, our iCFO Capital General Partners, and the team behind the scenes for being here today as we look forward to a productive and meaningful conference. Our presenting companies have worked hard to prepare their presentations and are ready to answer questions from all investors participating today. The presenting companies are at the forefront of innovation. Many of these are at various stages of development, such as early stage, startup, growth, and expansion across multiple industries such as manufacturing, healthcare, cybersecurity, fintech, and others. The format of today's virtual conference is as follows. Each presenting company will deliver an 8 to 10-minute presentation. I will provide a 2-minute warning for each presenter. Please visit each presenter's virtual booth for further discussion. The presenter will be able to answer any questions you may have. After the last presentation, you can click on Exhibitors, select the booth, click on Connect, and meet live. For presenters, as you go through the slides, please request to advance to the next slide as needed. The presentations will be done back to back, allowing the investors watching to view all of them in the next 2 hours. If you miss the presentation, there will be a video replay of the event. For those who were not able to view it live, you will have the opportunity to see it here at the auditorium. The conference is scheduled to end at approximately 4 p.m. Pacific time. There will be networking with entrepreneurs and investors using the virtual booths immediately after we finish with all the presentations. For those who have any questions regarding the event or how the virtual booths work, there will be an information booth available where we can assist you at any moment. In addition to the virtual booth, you will be able to join a group networking session at the virtual lounge. Simply click on Lounge in the submenu. Investors, our presenters are looking forward to meeting and speaking with you. And now our legal disclaimer. Please note the iCFO is hosting this conference to enable participants to gain some insights into the businesses of the companies making presentations today. The contents of today's discussions are not intended as an offer of any securities and should not be construed as an investment offering to any participant. All statements made in business presentations today's conference are statements made by each company and do not represent the viewpoints of iCFO. Each company is solely responsible for any statements or representations they make in their presentations. iCFO has not independently conducted any due diligence and does not endorse any investment offer that might be made in separate meetings with any company. Potential investors should engage their own advisors and conduct their own due diligence. At this time, we'd like to introduce the first presenting company, Orion Innovations. So please welcome Mr. Rodney Shute, President and CEO. Rodney is a proven multiple-time president and CEO of publicly traded, privately held, venture capital, and private equity-backed companies. He has led several companies in the healthcare industry, including Hypersound, with directed audio emitter technology, Widex, and Unitron, which both develop hearing solution, and Aspira with clinical software. Orion Innovations Incorporated is a healthcare company led by a proven management team with a track record of growing and scaling businesses, focused on minimizing human clinical errors and creating standards of care via proprietary IP-protected solutions to common healthcare problems. Rodney, the floor is yours, sir.
Thank you, Robert. Good afternoon, everyone. Again, I'm Rodney Shute, President, CEO, board member of Orion Innovations. Orion is a med tech company. I'm about to cross my 37th year in my career, all of it in healthcare. I spent my first 18 years with GE Healthcare, got recruited away to Smith & Nephew Orthopedics, ran 2 global businesses, and then got my first opportunity to be a CEO of a startup. This is actually the 6th company I've ran. 3 of those have exited, 2 through acquisition, 1 through a licensing solution, licensing exit. Next slide, I'd like to introduce Chris Schnee, our Chief Commercial Officer.
Everyone, this is Chris Schnee. I'm the CCO here at Orion Innovations. It's a pleasure to be here. With the clock already ticking, we are going to be moving at a fairly good clip. A bit about myself. So 23 years in healthcare in a variety of verticals: oncology, cardiology, diagnostic imaging, urology, all in commercial functions. I began at GE Healthcare in the PET/CT imaging suite, moved into the M&A and orthobiologics at Smith & Nephew. Met Rod 15 years ago and brought a startup to standard of care in the vein imaging space, and had experience in artificial intelligence, software as a service platforms. I serve all commercial functions here. Mike Carson's our CFO, a fantastic mix of experience all together. We have over 75 years of healthcare experience spanning all major verticals with multiple exits, licensing, white label, and the like. Next slide, please. As Rod gave us a short intro on, so Orion Innovations is a healthcare company. We focus on a premise that powerful can be simple. And so we have a portfolio of single-use, smart, simple disposables. And the tagline is really our day-to-day living principle is, how do we make smart simple for the end user? Next slide. Founded in St. George, Utah. We started in 2018. The management team you just got a quick briefing on, and we have plenty of experience in scaling and successful exiting organizations. So errors, liability, and lost revenue are what we're going to put our attention to today, primarily in the hospital and dental sector. We are a revenue generating organization. We booked a little over 300,000 in 22 with a portfolio of these single use and deeply IP protected solutions, and we'll provide some financial forecasting here in a moment. We are at the moment where our business is de-risked and highly proven across the fundamentals of commercial success, and we are in the add resources and scale. Next slide, please. 2 trains are going to run down a track. So Orion Innovations has these 2 problem solution architectures underneath its umbrella. One train, let's focus on the left, is going to be in the hospital market. So focusing on me as the patient, I was an ICU patient at 6 weeks and 6 months, but I didn't realize that IV lines had such an amazing error rate. Over half of what are called adverse drug events come from infusion. They're significantly life-threatening, and for every IV line you have after your first one, you have a compounding error rate. The settled litigation costs for these are very well documented. The direct cost to fix these mistakes equally so, and with almost 20% of nurses quitting the workforce post-COVID, and a unique piece of case law where a nurse was tried for murder in a civil court for harming a patient, the best error you're ever going to face is one you prevent. This is the problem that our solution MedLight ID solves. Dr. Provost unfortunately lost his son to cancer. He invented MedLight as a serial entrepreneur. He's the chairman of our board. The second train track, which is in the dental space, solves the following. A patient that gags, maybe bite wing x-rays, cleanings, or molds of their teeth. That's not a small occurrence, it's a large. So 8% of the population every time, 50% at least once. But what it translates into is lost procedures, patients, and revenue. And we were able to work with a dentist who solved this and acquired their IP to completely suppress the gag reflex. Next slide, please. So if those are problems, these are solutions. Powerfully simple is our mantra. MedLight up at the top is a smart lighting system that clips to infusion lines. It is revenue generating globally. In 10 seconds, we can remove that liability and error with a significant increase in speed to deliver medications. And that solution forms an interdepartmental hospital-wide legal required framework. No gag, equally powerful. If MedLight's a disposable in hospitals, no gag is a consumable in the dental space. It is revenue generating throughout the US and soon globally. In 10 seconds, we can suppress the gag reflex for an hour, recapturing lost patients, procedures, and referrals. and we can attach to very large existing markets as a companion device. Next slide, please. Really broad brush, in not reading to the slide. Overall, one of the strengths of Orion is we have incredible depth in IP. So 6 utility patents on MedLight, about to be 7, multiple filed overseas, 2 patents for no gag, patenting gag suppression in the US, multiple overseas. Regulatory, both products enjoy the lowest rung of the regulatory barrier. So that allows for tremendous expansion and done so at lower costs and higher speeds. Evidence and ROI, we have fantastic white paper and peer-reviewed journal evidence, so highest grade of evidence. So we have an ROI that's established, we can show time and error reduction, and we capture net new procedures respectively. And being brief on expansion and upside, voice of customer already tells us what generations 2 and 3 will become, and we have multiple verticals and no gag to conquer. Next slide. Competition to Orion, this is a short slide because there is no direct competition, only status quo. If you're a patient in a hospital, you're facing printed labels or tape, literally tape from your garage as the status quo. And if you're a gagger in the dentist office, what you face is increasing risky and adverse event oriented procedures like Valium or full sedation. The bottom line is that the costs and errors that exist in the market today are because these solutions don't solve them. Next slide. Very large markets. So TAM, SAM, and SOM, 6 billion and 7 billion respectively. These are very addressable markets, solved in seconds, highly patented solutions, and lots of upside. Next slide. Picking a few points to keep it short. This is the MedLight ID commercialization. So we have customers in the acute healthcare, air ambulance, VA, DOD. We have no pushback on the established price point of $2,450. It's a 6,000 hospital market with a tremendous amount of system-wide revenue potential and very attractive gross margins north of 51%. Next slide. Similar slide for no gag. We are actively selling a pouch of 20 single servings for $80. No pushback. There's 150,000 offices in the United States, and gross margins of 87% are incredible. Those adjacent verticals and international expansion are all upside, and we have over 1,000 sales reps already selling no gag today to 2 of the largest dental distributors in the country. Next slide.
2 minutes, Chris.
Thank you. Timeline today, multiple patents, many more being created, and we have successfully created the fundamentals, are creating more intellectual property, and are scaling 2nd and 3rd generations and expansion. Is we will become a $100 million business with multiple exits. Rod will take the last minute and 40 seconds to frame that out. Next slide.
Thank you, Chris. These 5-year financial projections aren't Rod and Chris throwing the dart at a dartboard. On the acute healthcare side with MedLight ID, the numbers are modeled by department, multi-department, hospital adoption, multi-hospital adoption. The model's been confirmed by one of the largest VAs in the country, one of the largest university-based healthcare systems in the country, and a mid-sized regional hospital in the country. On the no-gag side, it's even simpler. It's office by office. An office buys 1 pouch and then a reorder rate, and then a second office and a reorder rate. The takeaway here is these numbers are less than 2% penetration of the SAM and the SOM. Next slide. The ask, as Chris has said, we're completely de-risked, revenue producing, reoccurring revenue stream, razor blade strategy in US oral care, VA, DOD, acute healthcare, OUS, raised to date 6.4 million, friends and family. Today we are seeking 7 to 10 million. Use of funds come from sales deployment in the US, layering in 1 at a time, a direct sales organization for MedLight, generation 2 product development, generation 2 and 3 product development for MedLight ID, working capital to bring on our fractional COO, CFO full-time, getting ahead of some of the supply chain issues we all see globally, and then sales enablement tools to drive both MedLight and no gag. Exit, multiple conversations already on MedLight ID with Beck and Dickinson, ICU Medical, early conversations with Henry Schein. And then on no gag, because Henry Schein is one of the largest players in the world in medical device and dental, a potential exit there or the thought of an IPO in 3+ years. Next slide. Thank you for your time.
Thank you.
Thank you, Chris and Rodney, for that great presentation. I do want to remind everyone that we'll be having a networking session at the end of all the presentations using the virtual booths immediately after we finish with all the presentations, and also that we have available an information booth where you can we can assist you with any questions at any moment. So now let's move on to the next presenting company, Polyan Technology. With Mr. Boris Maslov, the chairman of Polyan Technology. And over the last 30 years, Dr. Maslov accumulated extensive experience building, developing, and managing companies in cutting-edge industries such as financial, high-tech, biotech, chemical and nanotechnology, and advanced manufacturing. He founded or co-founded several companies and served in various executive positions as chairman, board member, and general manager. Various exits, including sales of assets, M&A, and public exits. Dr. Maslov is currently serving as a board member for several private companies. Polyan Technology is a fabulous semiconductor company developing hardware-based AI solutions for various sensors, such as microphones, smartwatches, cameras, earphones, and industrial IoT. They are a team of 40+ engineers led by serial high-tech entrepreneurs and seasoned board of directors. They operate out of UK, United States, and Israel offices. They're looking for a round A investment of $12 million. Boris, the floor is yours, sir.
Well, thank you very much for the introduction and greetings to everyone. Good afternoon, good evening, depending on the time zone. Can you all hear me?
Yes, we can.
Okay, good. So that company, Polyan Technology, is dealing in the area of artificial intelligence and hardware solutions for that. Next slide, please. At a glance, we are fabless semiconductor, and the term means that we are manufacturing chips, semiconductor chips. Not ourselves, we go to fabricators, to big names, as most companies do. Good example is Apple, also fabless semiconductor company, or NVIDIA for that matter. As Robert presented, we are about 40+ people, with a fair split between engineers, really solid engineering talent, and really solid management talent. As a group of promoters, we've been promoting businesses like that on a continuous basis over the last 15-20 years. We incubate one at a time. This is our current one. We've done it before, we will do this one too. Today, we are funded by angels and partly venture capital. We have 3 venture capital on cap table with about 3 million from venture capital and about 9 million total from angels, friends and family, and ourselves. So we're done with our seed round, capital stock. We are currently raising round A. What we do, as we do chips, and those are very inexpensive chips, semiconductor chips, we target markets with large audience, billion-plus devices always, today's markets, today's available markets. So we go after wearables, watches, earbuds, cell phones, hearing aids, and we're going after industrial IoT, which includes particularly smart tires. Our initial products are in the areas of extraction of the voice, clearing of the voice, in health monitoring, in vibration and tires, interesting application, and in positioning of the eyes of the humans for augmented reality. Next slide, please. So what seems to be the problem? The problem is that as computers get smarter, they use more and more sensors, microphones, cameras, vibration, accelerometers, and on and on. Your Apple Watch has about 70 sensors. Your car has about 3,000 sensors. If you count all around, there will be 45 trillion sensors. That's 6,000 sensors per living human being. And processing the data initially of the sensor is the biggest problem. So next slide, please. What we do artificial intelligence, right, at the sensor. So instead of running signal from the sensor to the cloud, to Amazon, services. We just do it on the chip, right at the sensor. And we achieve that at thousands times less power, thousands times faster, and tens times and hundreds times cheaper. Next slide, please. So three major verticals. We develop sensors for IoT, Internet of Things. And the first application that we have here is monitoring of vibration in the automotive tires. We do, and available market right now is about 4 billion units. We do in the middle column processing of voice for hearing aids, for cell phones, for any voice communication. We remove all noise. We basically go the other way around. We extract voice, remove noise. And we do monitoring of human health, also north of 1 billion units by 2027. Next slide. Specifically in vibration. Tire and pressure monitoring is mandatory. For example, in the United States, vibration becomes unavoidable, especially with autonomous driving, self-driving. Current solutions do not provide ability to monitor vibrations. We can. So we have a contract with Goodyear right now. It's about 300 million tires a year. Not all of them, obviously, to be subject to our technology, but it's a good start. Next slide, please. We do work with hearing aids right now and extending that into voice communication markets. And you see on the bottom right the names that we're working with. To be an example, we use microwatts. We can go into the earbud. The nearest competitor takes the entire MacBook Pro power to simulate what we do. So instead of MacBook Pro in your ear, we have 1 by 1 millimeter chip in your ear. And obviously that's why we have such attraction. Next slide. Health monitoring. The health monitoring problem is that those wearables need to be recharged every night. So you cannot do 24/7 monitoring. In case of seniors, they forget to charge. What we do is always on energy harvesting. You put that bracelet on, you never take it off. It monitors your health comprehensively all around with all the sensors, comprehensive picture of your health monitoring. That's the ultimate solution. So we have extremely strong traction here. Next slide. Speaking of markets, total available market, sizes of the markets, I was giving you numbers of the devices or units. Those are in billions in all of three applicable markets where we have products. In dollars, total addressable market right now is 900 billion. Good number, but as we go to serviceable obtainable market is about 1 billion today. So for us, it is unlimited capability to sell, and it is capability of manufacture. That's what holds us. Next slide. The way we do our chips is different from the industry. What industry typically does, they make the chip and then they try to sell it. Come around and say, would you buy my chip? I'll help you to run it. We do the other way around. We come to the customer, for example, to Goodyear, say, what's your problem? They say, oh, we need vibration on the tires. We develop system for that before we build the chip. And when Goodyear is happy with the system, they say, go ahead. At that point in time, we make the chip, which is specific for the purpose. So we're application specific and we are front loaded very little compared to classic chip design. So we are CapEx light, we're OpEx light. Next slide. In terms of competition, we compete with two different categories. Larger left upper, those are big guys, ARM from UK, various RISC and various central processing units. And at the bottom, there are dedicated companies who are trying to solve the same problem. We are in the upper right, where we should be, beating all competition. And there's more details obviously on the slide. I'll skip those. Next slide. In terms of the team, we're quite well presented in Israel. About half of our people are Israelis, and the United States. So it's a good fair mix, 6 and 1 on the executive team. Most of the guys are serial entrepreneurs, with the exception of upper left, who is a longtime executive in semiconductor, Tower Semi, And bottom right is academia, Stanford University, very well known and regarded expert in the area. Next slide. On the roadmap, semiconductor industry has inertia, so revenues are lasting long, but development cycle is long. So in 24, we start our first volume production. In 25, as we start selling to Goodyear and Oppo, we go break through 10 million nice and easy. And round A brings us, around A, round B, about 37 million, brings us to profitability and positive cash flow by the beginning of 25. Next slide.
A little under 2 minutes, Boris.
Yeah, that's our financial projections, basically projecting solid gross margin north of 60% and positive EBITDA starting in 26. Next slide. That's our cash projections. We need about 12 million to go through the end of 24, another 25 to go through end of 25, and then we become cash positive. Next slide. Our ask is 12 million of round A, preferred class A stock on 75 million pre-money. And at the end of the round A, we will have chips in 3 major markets selling, 10 million in sale contracts, and about 50 patents. We will be NASDAQ IPO ready. It's not necessarily the exit, but it is a potential to which we are getting ready for, the entire board and the entire team. That concludes the presentation. The last slide, please. 2 contacts, myself and our CEO, would be best. Thank you so much for your attention and for your time. Thank you.
Thank you, Boris, for your great presentation. I do want to share some reminders before we move to the next presenting company. The conference is scheduled to end about 4 o'clock Pacific time, and there will be networking with entrepreneurs and investors using the virtual booths immediately after we finish with all the presentations. And for those who have any questions regarding the event or how to use the virtual booths, there will be an information booth available where we can assist you at any moment. In addition to the virtual booth, you will have able to join a group of networking session using the virtual lounge. So simply click on lounge in the submenu, and let's continue with the next presenting company, which is Digital Asset Management. Let's welcome Juan Lorenzana, the president. And Juan started his first company, a web hosting company, in 1997 as a student with 2 of his college professors. Upon graduating with a degree in computer science with an emphasis in software engineering from Brigham Young University, Lorenzana went to work for Lucent Technologies, where within 2 years he transitioned into management and 3 years later became general manager for Lucent's client care solution. Lorenzana has had several IT businesses and participated in several startup ventures of varying capacities since leaving Lucent in 2005. Both on and offshore, in 2014, he joined Atlas 44, a fintech company offering secured loans in the construction industry. And after serving as their CIO for 1 year, he became the COO. Lorenzana has been involved in cryptocurrency markets since 2017 and has served as a consultant to various fintech and cryptocurrency companies. Digital Asset Management is building the next generation payment network that is focused on seamlessly supporting cryptocurrencies and government-issued CBDCs by launching a revolutionary crypto exchange. They will build out a network of worldwide exchanges that will provide the engine to offer payment services in both traditional and next generation forms of currency. The floor is yours, Juan.
Thank you, Robert, for that introduction, and greeting to everyone on the call. During this presentation, I'm going to cover 4 things. The first is, what is digital asset management? What kind of makes us unique? Number 2 is, why is being in the digital currency market a good thing, despite all the news that we're hearing? The third thing is, where's the market headed? And last but not least, what makes digital asset management a good company to invest in? Can I have the next slide? Thank you. So what is digital asset management and what are we doing? We are building the next generation mobile wallet system for customers to invest and make payments with fiat, cryptocurrencies, and future CBDCs. CBDCs are central banks that are based on digital currencies. Our target market are consumers that are looking to interact with both traditional and next generation forms of currencies, both in the B2B and B2C markets. And our offer is a digital exchange that allows individuals to hold fiat and cryptocurrencies, and through our payment network, it allows them to use those assets when purchasing goods and services. Next slide. So let's talk a little bit about the cryptocurrency market. First of all, the cryptocurrency market is very similar to the early 90s with the creation of the internet. It's rapidly growing. We're seeing adoption by several countries, by several banks, by several companies. But one of the big takeaways is that this market has appreciated a value of $1 trillion since its creation. What that really means is that worldwide transactions in the cryptocurrency markets are about $37 billion, and in the payment side, it's about 9.46. So as cryptocurrency has evolved, what we're finding is that the traditional banks, trading desks, financial planners can no longer ignore the cryptocurrency market. And so we're seeing them start trying to figure this out. And this is where digital asset management comes in. We're forming a very cohesive and singular solution for both payment and custody. The next takeaway is really that in the UK and the EU, they've created a very crypto-friendly framework, enticing companies to set up and operate out of that jurisdiction. Whereas in the US, they're still trying to figure it out. They're a little late to the game, and the current administration has really not provided a lot of guidance. But what we're going to see is how this has evolved. Can I have the next slide? I'm often asked, why should I invest or even touch cryptocurrencies? This graph or this chart here shows the historic price of Bitcoin from 2012 to today. It highlights the highest price any day that year, or sorry, the highest price that year and the lowest price that year. And one of the big takeaways is that the cryptocurrency is an extremely volatile asset, as you can see. But let me show you something really quickly. If you focus just on the lows moving forward from 2012, would that be a good asset to hold? Contrarily, if you focus just on the high price values of Bitcoin as it progresses through the years, would it be a good asset? But realistically, no one can buy at the low and sell at the high. So let's look at another scenario where someone would purchase at the high in 2012. At what point in the low the following years would it make sense for you as an investment? You can quickly see that there's an average 3-year cycle when it comes to cryptocurrencies. So you may have heard stories of people who made a lot of money in cryptocurrency, and you've probably heard just as many stories of people who lost a lot of money in cryptocurrencies. And the reason is because of the volatility. But this volatility, once you understand that it has a 3-year cycle, creates what I call an arbitrage opportunity for companies to enter into the digital currency space. Just a few takeaways here. 2013 was a good year. 2017 was a great year, followed by 2020 and 21. You'll notice that 2022 was kind of a down year, and we're starting to see an uptick in 2023, which this information will become important in the next slide. Next slide, please. If we take a look at VC deals done in the crypto space, if we focus on 2017, which is a great year for crypto, you'll notice that VCs really didn't come in until after the price went high. So you'll notice that a lot of investment came in 2018. And over 18 and 19 and 20, it kind of stayed a little flat, coming down a little bit. But 2020 was a great year. And you can see the VC community respond by increasing the investment levels in 2021. 2021 was even a better year, and you can see the increased investment coming in 2022. And then you see it start tapering back down. And last key point is that you're starting to see it tick back up. And that's because we're getting ready for another 3-year cycle. So 2022 was kind of a down year. 2023 should be a recovery year, and 2024 should be a really good year. Next slide. So digital asset management is creating, one, an exchange, which we plan on launching in phase 1, and 2, a payment network that will facilitate payments both in fiat and crypto. Our phase 3 really is to then expand that globally into different jurisdictions. Next slide. So what makes our exchange unique? Well, first of all, not only do we allow people to trade cryptocurrencies, the top cryptocurrencies, but we took a page out of the mutual fund, which is mutual funds are a collection of stocks that minimize risk, reduce volatility, maximize the return, all through diversification. Well, we've done the exact same thing, but with cryptocurrencies. So we call these baskets of cryptocurrencies. That's very unique. To date, there are only 2 companies that offer an index fund based on cryptocurrency, but no one is doing baskets. These baskets are put together using mathematical models like the efficient frontier, which is used by hedge fund managers and others to kind of what's the right mix of assets to maximize my return, but reduce the volatility and the risk. The second thing I want you to take about the DAM exchange as a key point is the fact that we also have our own utility coin called the DAM coin, and I'll get to that in just a bit. Next slide. Could I have the next slide? Thank you. What makes our payment network unique is the fact that if you think about what an exchange does, an exchange has to be able to, 1, onboard fiat, 2, offboard fiat. We've got to be able to onboard crypto and offboard crypto. But the key point is that we got to be able to exchange those 2 asset classes. And as such, that becomes an engine for the payment network. If we look at everyone that's involved in payments, and that market is huge, that's a 9.46 trillion worldwide market. Everyone that's trying to get crypto involved is doing it in such a way that the customer has to pay with crypto and the merchant has to accept crypto. With our solution, because we have the exchange as the engine, we're going to have, for example, a use of our digital asset management exchange that will have an account that has fiat, crypto, and these baskets. And they'll get to decide that when they use their credit card or their mobile application, they'll get to decide, hey, I want to pay with fiat. No, today I'm going to pay with Bitcoin. Or you know what, let's take it out of these baskets. The key point is that we're going to be able to deliver fiat to the merchant, which reduces the risk and really is a big barrier to entry for those that are trying to deploy payment solutions in this space. Next slide. What makes us different then? Well, 1, we were designed to be regulatory compliant from the beginning. 2, a lot of the exchanges that have had trouble today did so because they were basing their models off of banking models or finance trading models that don't apply to an asset that is very volatile. So we transact every transaction every single time. We have a 1-to-1 reserve system, and that's very unique. Nobody else is doing that in this space. Next slide. So again, we're launching phase 1, the exchange, phase 2, the payment network, and phase 3, expanding into separate and other jurisdictions. Next. A little bit about the digital asset management coin. We created the blockchain in April of 2020. We dedicated a total supply of 500 million coins, 50 million reserved for founders and employees, 50 million for investors, 50 million for future use or initial coin offering, with 350 million mineable by miners. We have a fixed price coin, which is a $2 per coin. It does not fluctuate, which means that it's not subject to market pressures or market manipulation. Next slide. The current status is as of May, we're launching, we have 2 months of product development before we launch. We're already doing our licensing and we expect to launch in the 3rd quarter. On the payment side, we've already created and vetted our solution. We hope to launch in Q4. Next slide. What are we seeking for? We're looking for $2 million in a seed raise. We anticipate that we'll have a round 1 and round 2 raises of 20 and 50 million respectively afterwards. Next slide. We have an experienced management team. All of us have been involved in technology and fintech. Roland had a company that he sold in 2000 to Charles Schwab, and James not only was involved in the fintech company, but managed $7 billion in assets when he managed the Arizona Pension Environment Policeman Fund. The last few slides are just some references, but I want to thank everybody for the time.
Thank you, Juan, for your great presentation. I really enjoyed it. I want to give out some information before we continue with the next presenter. Investors, please visit each presenter's virtual booth for further discussion. The presenter will be able to answer any questions you may have after the last presentation, and you can click on exhibitors, select the booth, click on connect, and meet with them live. Also, if anybody missed the presentation or you know someone, there will be a video replay of the event. For those who were not able to view it live, you will have the opportunity to see it here at the auditorium. Now let's move on to the next presenting company, Cultivate. I want to invite and welcome Mr. Dan Schweiger, the CEO of the company. Dan is an experienced entrepreneur, business executive, visionary, and inventor. And prior to starting Cultivate, Dan was the founder and president of Mentor Capitalists Incorporated, which provided a full range of resources and development strategies needed to increase revenues at startup and turnaround companies. Cultivate empowers the regenerative economy by unlocking the natural resources within the dandelion as a sustainable source of high-performance materials from bio-based feedstocks, Cotra. Cultivate has built a sustainable and scalable North America supply chain to distribute natural rubber, resin, inulin, and fiber around the world. Dan, the floor is yours, sir.
Thank you, Robert. Can you tee up that video for me, please?
Yes.
Thank you. Thank you, Robert. Thank you, everybody, for having us here. Over the next 8 minutes and 34 seconds, we're going to talk a little bit about natural rubber and synthetic rubber and their difficulties and some of the solutions and some of the problems and solutions. So advance a slide, please. As I got into this business, I got into it because we're solely dependent on a foreign import for a very critical material that's very dear to all of our hearts throughout this whole world, comes from Southeast Asia. I don't want anybody to think that we're anti-Asian, because we're not. We're really pro-American manufacturing, as well as having a supply source here at our fingertips. So there's some problems, there's some solutions. I do believe we are the solution. We're curing a lot of the problems as we go along, but we have 8 years of cutting edge development work. And I've actually been in this alternative rubber space since 1995. Go ahead, advance, please. So, the big snapshot here is, and we'll talk a little bit about, carbon footprint, but if you think about that big tanker coming across the ocean, it takes 30 to 40 days for that big tanker to get here from Thailand or from Indonesia or Malaysia, wherever it's coming from. And that tanker actually will burn about 63 million gallons, 63,000 gallons every 24 hours. So it gets into the millions before it ever gets here. So carbon footprint is very easy for us to sell against. But the biggest thing that we can sell against is we are solely dependent 100% on an import. And we know since COVID what being solely dependent on a foreign imported product can do to us. So it's strategic material. It's on the critical supply list. Our government actually warehouses and holds on to a certain amount of this precious material, just like they do with some of the other cobalt and other products. Advance, please. So the big picture here really is we're customer centric. We went down into the market, asked tire manufacturers, asked non-tire manufacturers, which are footwear companies, apparel companies, yoga mats, wetsuits, basketballs, footballs, you name it. And there's a lot of lifestyle brands that are out there. But really what they're looking for is that they're held accountable, and they need a product that's going to help them meet their ESGs as well as their LCAs with little to zero negative environmental impact. So as we've started over the last 8 years, our focus has switched and changed, going and gravitating more to saving the environment, carbon footprint, sustainability. Even though we had all of that, we just didn't tout it. Now we are. We're bringing our best foot forward here, and we actually have a material that's actually better than any synthetic and better than any natural rubber that's on the market today. Advance, please. So if you stop and think about synthetic rubber, it's not sustainable. It's pretty dirty. It's pretty dirty business. It's about 14 million metric tons. There's 300 million tires every year sold and thrown into the landfill. We hear about the petroleum and fossil fuel that's been dumped in the oceans. We're really about displacing fossil fuel and plastic. Next, please. So you may say, well, yeah, but Dan, you said there was a natural rubber that comes from Southeast Asia. Yeah, it has its problems too. It's not very friendly to the workers, and it's controlled by a cartel, and we are dependent on it. And there is a lot of deforestation going on, and our rainforest is being destroyed due to the fact that, when these trees are being harvested, it only has a certain amount of years, and then they have to get rid of them, and they're not replenishing them. Advance, please. So the solution really is having a local source, having a better source, a secure, sustainable, and high quality product. And we actually produce 4 products from the Casa dandelion: rubber, resin, inulin, and fiber. Next. And you get into carbon sequestering here, we actually are good for the soil health. We sequester carbon for 8 to 12 months because that's the life cycle of our planting season, depending on the area. And we sequester carbon, and there is a lot of soil health and beneficials that the dandelion does. It goes down a little deeper. Its roots go down deeper than most plants. It aerates. It brings nutrients down there. It brings carbon down there. It lets the microbes kind of work, and lets the bugs and the worms kind of work and do their thing. Next. So the market that we're really going after right now, because we don't want to go into the commodity market, we're really going into the specialty market. And that specialty market is growing as we speak. And we're starting to see manufacturing come back to the United States. So therefore, it's starting to grow here even more so. Next, please. So that marketplace that we're looking at, it really is the footwear, it's industrial products, it's actually apparel, and we can get into the automotive and transportation, but that's not one that we're going after right now. The ones that we're going after, the ones that's really looking for ESGs and LCAs, and that life cycle analysis is really, really important. And they'll actually pay the high premium price to have something green friendly and that's saving the environment, like the Patagonias of the world and the Vans of the world and certain corporations like that. Next, please. So our model really is we're fully integrated. All of these are contract. We don't have any steel on the ground right now, but we do have 40 patents, and it's wrapped around from everything from the genetics and the seed and the varieties right up to the planting and the processing. And most companies don't do just one bit, or most companies just do one bit or piece. They don't do all of this like we're doing, but we have to prove it and show that it can be done. Next. So you say, well, how do you fare with the other naturals that's out there? There's Waiuli that's out there, but it needs the desert. Havea needs tropical. We can grow in 48 states in the United States and throughout the world. And we're really automated and the Waiuli semi-automated. And as that Havea tree, every bit of rubber we get today, it's all manual. Next, please. We have actually met a lot of milestones with on shoestring budgets. As you can see, I won't belabor it too much, but every bit and piece of our company and every process we've advanced. Next. Some name brand companies that have come along with us. The beauty of this is at 3,000 acres, we're at a break-even point. We are revenue positive, but we're not break-even positive. However, with these four customers could take everything that we could produce for the next 10 years. Advance. We can't do it alone. I mean, here's some of the name brand companies that we've been working closely with, from plant science to agronomy to processing, to our partners that have trial and tested and have proven that this material will work. It does work. It works well. And our commercialization partners down here, some of the big name brands that we've all known, and then of course our funding and partners there. Next, please. Talked about the patents. We got 40 patents internationally. Continue, please. Let's go ahead and get through this, because I'm down to 45 seconds. Let's get to the ask, so that for those that are interested. So I think it's the next next. Okay, so as you can see, we've done quite a bit on a shoestring budget, but we are in a $10 million raise right now, and use of funds is going to be to continue with certain R&D, but also to improve our outsourced facilities. So there's a little bit of CapEx there. We plant our crop, we harvest it, we process it, and then again, we need some working capital and some other expenses. We expect to go through another round of funding, probably going to be at about a $7 to $8 million round. The next round, that actually can be done internally, part equity, part debt. Next, please. Well-oiled machine here with great management team that has done this before, and we've all worked together doing this before. So if anybody wants to continue to discuss anything about our business, please join us in the room at the end of this presentation, please.
Dan, thank you very much for your presentations. We do have a couple of some minutes left. If you want to add something additional to your presentation. If not, we can move on. Is there anything that you want to close with?
Sure. Let's go back to that regenerative agriculture, since we didn't get to it. And that's very important today, right here. We're not perfect, and nobody's perfect in this world when it comes to sustainability and when it comes to regenerative agriculture. And the definitions are still out there, but we are really making inroads every step of the way, from the soil health right on up to the crop diversity. We work as a rotation crop, so that's to minimize the risk of disease and parasites, as well as our growers that we work really closely with have livestock that they kind of run on their farms as well. So it's one of those things that we're constantly striving towards hitting all 6 of these principles, but right now we're probably hitting 4 and striving towards number 5. But soil health is very important. Water conservation is very important. Biodiversity, and of course this carbon sequestering that I talked about early on. So this is very important, and we've kind of done this from day one. And there's tracing and trackability with this, and it just really gets up to about 4 notches above anybody else that's doing anything close to this in the rubber, resin, inulin, and fiber business.
Dan, thank you very much for this much needed technology. Definitely looking forward to it. And I do have some information before we move on to the next presenting company. The conference is scheduled to end approximately at 4 o'clock, and there will be networking with entrepreneurs and investors using the virtual booths immediately after we finish with all the presentations. And for those who have any questions, we do have an information booth available where we can assist you at any moment. And additional to the virtual booth, we do have a virtual lounge that you have access to by simply clicking on lounge in the submenu. So let's move on to our next presenting company, Brandon Garrett with Electric Playhouse. Brandon is the co-founder and CEO of Electric Playhouse, and he's an entrepreneur, architect, and creative technologist with a passion for creating immersive and interactive social entertainment destinations. He co-founded Electric Playhouse in 2018 and served as its COO from its inception until 2021. During his tenure as COO, Brandon led the company through a challenging 14-month closure due to COVID-19 pandemic. Only 6 weeks after the company's opening in February 2020, in 2021, Brandon became the CEO of Electric Playhouse and has since continued to lead the company to new heights. Electric Playhouse is an immersive and interactive social entertainment company that offers a unique form of entertainment to customers of all ages. Their modular spatial entertainment platform combines a network of sensors, projection mapping, and a content management system to create immersive experiences that don't require any headsets or controllers. This allows them to track guests of all ages and transforms the built environment into the next big media platform. Their vast content library of experiences is engaging and interactive, appealing to a broad market, including families, young adults, and corporations seeking team building activities. Brandon, the floor is yours, sir.
Thanks for that introduction, Robert. And we could advance the slide. So by trade, I'm an architect, and I had a lot of landlords and developers coming to us with these big empty boxes because their anchor tenants had kind of gone to the way of e-commerce and other disruptions in the market. And so they were really seeking, new options and concepts to really drive that lost foot traffic. And just a few weeks ago, we saw Bed Bath & Beyond filed bankruptcy. So that's another 30 million square feet on the market. And for the larger boxes, particularly 20,000 square feet and higher, those are harder to fill. And in some cases, landlords and potentially mall owners who have lost their anchors, all of those other tenants that rely on that foot traffic can actually get out of their lease if they fall below a certain level. So they're certainly motivated to find a new option on the market to do that. Next slide. And so that's where Electric Playhouse comes in. And so we're able to transform these large, big box vacant spaces into new entertainment and community hubs full of immersive and interactive digital experiences that are really designed to bring people together and attract a wide audience. Next slide. And we do that through a combination of projection mapping and a whole network of sensors that we install in the ceiling. And so what that means is the walls and floors react to you without any headset or controller. And so this really allows for all ages to walk into the space. And we leverage that technology in a lot of fun and interesting ways. And we've got a video to kind of give you a hint of what the heck I'm talking about. Next slide. And if you could play that video. So hopefully in that video, you got a sense of how everything's reacting to the guest, and you could advance the slide. Oh, jump to the next slide. I think you went back to, there we go. So everything you saw in that video, we could actually schedule on a given day. And so on the left there, we have really time of day scheduling. So with the click of a button, we can transform the entire environment to just this wide variety of different offerings. We tend to focus on fitness in the mornings, education, field trips, midday, games in the afternoon, and we have a full commercial kitchen with interactive party rooms where we'll do immersive fine dining events, corporate events, and concerts. Next slide. And so we're part of the location-based entertainment market, continues to grow. We're focused on the regional Southwest. That's where we're from. We're based in Albuquerque, New Mexico. We did a $5 million Series A in 2018, and that was able to open the facility. We closed, as Robert mentioned, after 6 weeks, but our team pivoted. We did a lot of museum work and have since reopened, with last year being our first full year of operations. And so now we're in growth mode and excited to announce our next location, which is in Las Vegas. Next slide. And so we've secured a spot right at the Forum Shop. So we have strip visibility. Those windows in that picture to the left is actually our lobby. And we're about 70% through construction. We've got amazing views of the strip you can see on the bottom right there. And so with that visibility and that exposure, this is really a national launch for the company. Vegas brings in about 42 million tourists a year. And so we see it as a big stepping stone in terms of negotiating future deals and really driving the brand. Next slide. This location is about 11,000 square feet, fully immersive, and we're pivoting and really targeting a corporate event audience because we could just completely brand the entire facility. And Vegas draws in about 24,000 conventions a year. And so our teams are already starting that outreach and looking to pre-book the venue for September. Next slide. And so our real strategy is to target those large landowners and landlords. So Simon Malls actually owns the Forum Shops, and they visited us and decided they wanted us in their top mall within the world. And so they're really looking at the performance of that venue. And after about 6 months of operations, if it draws the foot traffic, we have a big opportunity to scale within our portfolio of 250 properties. We also have the other large landlord and mall owner, Brookfield, and we're looking at a site for them in Dallas. And their investment team is coming out in a few weeks as well to just explore that option. We see big opportunity on the theater side as well. Next slide. And so real technology and IP we built the entire system from the ground up. We have 900 different experiences, and we're the operator. We run the brick and mortar location. And so we combine operation and tech to create kind of a full turnkey solution that allows us to be agile and adapt to the market much faster than others. Next slide. So on the market, you may see Van Gogh, Team Lab, and other experiences. These are all real museum focus audiences. They don't change. They have limited interactivity. Our advantage is that ability to constantly change who we are and what we do so that we can appeal to almost any demographic and drive repeat foot traffic and visitation. Next slide. And so we've got a full turnkey solution from design, software, art. So we do everything and operate it all. And we've leveraged Venable on legal and MR Profund, a big entertainment operation consultant on kind of the amusement side. Next slide. On the board of directors, we got experience on real estate venture, but we're actually seeking new board members with experience in themed attractions, entertainment, or operations. Next slide. On the advisory side, we've got a great team that has experience from Disney, Universal, Meow Wolf, and game studios, where we see big opportunity to expand within those markets as well. Next slide. And so how we make money, it's all through ticketed sales. So we have general admission for that wide variety of experience. We also do the fine dining events. And then corporate is also a big revenue driver where we do the immersive and venue buyout opportunities and special events on top of that. And so most of those are pretty evenly distributed amongst our revenue. And so they're all strong revenue drivers for the company. Next slide. And we apply that over our projections over the next 5 years, with Vegas being really unique in terms of that tourist market, that we really see expansion in major markets where we think each unit could do about 10 million annually. Next slide. And so our investment opportunity is in Las Vegas and the unit we're building out. So we're offering a profit share investment where we're seeking 5 million. We've raised 2. And with that investment, we do a 33% share of the profits annually until a 3x return is met. And we project that to be about 30 months. So you put $1 million in, you get 3 million out after that 30-month period. And then that ends your participation in that unit. And we do have corporate equity investment opportunities available as well. Next slide. And at the corporate side, we're kind of between an A and a B round. So we have a note, 3.5 million. We've raised $1 million there. And this is equity in the parent company with pretty standard terms. Next slide. And so in terms of exit strategy, we have the operators on the market. Dave & Buster's bought Main Event for $835 million. But we also see big opportunity for anybody who has a huge library of IP that we could transform into immersive experiences like the Disneys and Universals of the world. Next slide. So lots of traction locally. We've gotten great reviews. We're starting to get press in Las Vegas as well. And so that you're going to see more of that over the next month. And next slide. And this year, Albuquerque is tracking about 33% over last year. So we've seen lots of growth. We've raised a couple million, the Vegas spot, $1 million corporate, and we just launched a WeFunder. So we're using that to really market and draw investment from that local community in Vegas last week. And with that, that's my presentation. Thanks.
Thank you, Brandon, for that great presentation. I really find your technology and your platform very interesting. And anything that it's very customizable to any type of environment or event. I think that's kind of what sets you apart from anybody else. We do have a couple additional minutes, Brandon. If you maybe want to touch on something that you like to mention to close.
Yeah, it is that customization. I mean, every entertainment concept on the market, if you go there one day, the next day it's going to be the exact same thing. For us, we've had families that come in the day, do our games. Parents came back for dining at night, and the college-age kids came to our concert. So in one day, we captured one family doing multiple experiences. And I think that's why Simon Mall's national leasing director, who's been to every entertainment concept, saw us and said, we need to get you in this spot. And they really want to see how we perform because we're basically everything on the market in one package.
Definitely. Absolutely, Brandon. Thank you for that information. I do want to give out some information before we move on.
Reach out. We have a WeFunder, which also tells a little more of the story as well. And so we're looking to spread the word on that kind of more community round where we're trying to get those small checks, the community involved, the $100 checks, where we want Uber drivers in Vegas and that community to invest. So as tourists are going out and asking, hey, what's the thing to do? Electric house is top of mind. So lots of opportunity, and happy to go more in depth this afternoon on the specific raises as well.
Definitely, Brandon. I see big things happening for you. So with that said, I want to give out some information, invite all the investors to please visit each presenter's virtual booth for further discussion. The presenters will be able to answer any questions that you may have. And after the last presentation, you can click on exhibitors, select the booth, and click on connect to meet them live. Also, if anybody was not able to view today's presentation live, we're going to have the opportunity to see it at our auditorium. So let's move on to our next presenting company, Trident Coffee. Let's welcome Mr. Eric Johnson, the CEO of the company. Eric is a native of San Diego, and from a young age, he knew he wanted to serve in the military after seeing the example set by both grandparents. He obtained a mechanical engineering degree from the United States Naval Academy. Eric served as a civil engineer officer for 8 years in the United States Navy and deployed 4 times in 5 years to Israel, Afghanistan, and Iraq to support overseas operations. After transitioning from the Navy in 2016, he received his master's in business from the University of Southern California, which helped him navigate through the startup world. Now serving as the CEO of Trident Coffee, he is focused on creating connections with people over coffee and finding ways to impact the veteran community positively. Trident is America's finest cold brew, crafted in America's finest city. They are a health-conscious coffee company for people who live full steam ahead by creating connections, igniting ideas, chasing horizons, and sharing stories so they can be part of a tribe that reaches its full potential. all ahead, all together. They are sold nationwide at Sprouts and have 2 taproom locations and generating 4.8 million in lifetime revenue. Eric, the floor is yours, sir.
Thank you so much. I really appreciate that kind intro. Very excited to present Trident Coffee to everyone today, and we'll dive right into it. Next slide, please. So a big overview about the coffee market. Over 500 million cups are consumed daily in the United States. And what we wanted to do is operate kind of a very unique approach to coffee. We're from one of the beer meccas in the US in San Diego. So we wanted to kind of change it from a Starbucks model to what a craft brewery scene has provided for the ambiance. So we operate these really unique tasting rooms where they're basically like a craft brewery, but just for coffee instead of beer. And one thing we get associated with often is that we're the healthy version of Dunkin' Donuts. We offer our own keto baked goods as well as other gluten-free baked items with a really keen emphasis on health and wellness. So if people are going to drink coffee on a daily basis, we want to make sure it is the best product available to them with the quality, nutrition, flavor, and everything else needed to make sure they're living the healthiest life possible. Next slide. A little bit about, on the picture on the left is my grandfather, picture on the right is for me. And so saw this firsthand happen to my family. My grandfather had type 2 diabetes, ended up having a stroke and passing away from the complications. And my dad was going down that same route, was diagnosed as a type 2 diabetic. And I wanted to step in and try to help him where I could. And so really trying to change his daily habits. We focused on his coffee, worked on his walking regimen and changed up how he consumed his daily coffee. And we were able to get him back no longer in the type 2 diabetic range. His A1C levels are normal. And so he no longer has that concern about having to take insulin for the rest of his life, all by really just starting with kind of his daily habit of drinking coffee. So I've seen it firsthand, the importance of it, and know that it's possible for everyone to take advantage of. We just have to get away from the sugar, the high consumption of that specific in people's coffee and really work with them. And it's been great to see how people are loving the cold brew, loving the health and wellness products. And it made me very happy knowing that I was able to help my dad firsthand and not have to worry about these health concerns down the line. Next slide. So I was able to serve overseas, really saw coffee had a huge impact on how people connected overseas, really starting with either coffee in Israel or chai tea in the Middle East. And it really was a community beverage, and saw that coming back here, it was more just transactional, just come in, get your Starbucks, go. Not very many people sitting down. And so that's what we loved about the craft beer scene was a connection point. It was a community location. People came to share with each other. And so kind of took that concept into Marshall School of Business and brought on a couple of fellow veterans as a founding team. And then we've grown this into a nationwide brand. Next slide. So a little bit about traction for us. We have 2 operating locations here in San Diego. Third is opening here in the next few months. We do have distribution nationwide at Sprouts and looking to add multiple SKUs there. And then we've got into all the great local Southern California health and grocery markets. So Erewhon, Jimbo's, Lazy Acres, Bristol Farms. We have a really good solid distribution network here in Southern California. And last year we generated 1.45 million. And then total for our total revenue about 4.2. And we're up about 40% this year, growing very well, looking to secure the seed round to continue the growth. Next slide. Market size, I think everyone's pretty familiar with how big of a coffee segment there is, but I really want to focus in on this cold brew segment that has grown at 27% a year. This is where we fit into play. We do have the retail component. We do have the specialty coffee component, but this cold brew segment is really growing very, very fast. And we are positioning ourselves on the front end of the wave to really secure it. Starbucks is selling about 70% of their beverages cold now. So there's a huge shift in demographics in terms of how people are consuming their daily coffee. And we position ourselves very, very, very well to be on the front end of this by focusing on quality, consistency, and the craft component where people can really taste the difference. And we get that all the time in our reviews from our storefronts as well as our online presence and in stores as well. Next slide. So this is where we see with opening some additional tasting rooms here in San Diego. It's kind of an omni-channel approach. where people can really enjoy the full experience coming into our tap rooms, very much how breweries grew over the past, 10, 15 years. And so this is just some of our opening costs, our rate of return, cash to cash returns, and kind of the monthly payback for that expense to open these experiences here in San Diego. And then we want to go more regional over the next, 3 to 5 years by opening in Orange County, Los Angeles, and kind of expand it, because we've really noticed that the regionality play is huge, because we have such a large demographic here in Southern California with an emphasis on health and wellness, and people are obviously drinking coffee very at a very high rate too as well. So really focus on that segment in that area, and growing other opportunities with distribution partners as well, with Sprouts, Whole Foods, and other natural channels. Next slide. So again, what kind of makes us special? We really focused on this health and wellness component: low sugar, keto friendly, gluten-free, organic. Those are all huge talking points that our younger consumers are becoming very aware of and are really looking for. So we really try to position ourselves in that to be the better for you kind of coffee that's out there. And so we just operated just like a brewery though. So people are loving coming in, getting our keto donuts, our gluten-free bagels, and then all the cold brew offerings that we have. Just to let everyone know, we do offer espresso at the tap rooms as well. We just really try to focus on the cold brew, but we do offer everything, so people are coming in and have the opportunity to partake in coffee that they want to. Then we slowly but surely are able to transition them over to some cold brew, especially when summer hits, the weather's warmer, and people have been very responsive to that. Next slide. A little bit about the team. We have 3 veteran on the team, Navy, Air Force, and Marine. Josh handles the business development and wholesale side of the house. So he was able to get us into Sprouts nationwide, deals with all the vendors, the distributors. Derek is our director of operations, who handles the day-to-day ops between the roasting, brewing, packaging, and then myself as the founder CEO, kind of handling everything kind of up and out for the business as well. Next slide. A little bit about the business model we have, kind of the go-to-market. We've already been operating with tasting rooms, wholesale, and direct-to-consumer, but really seeing the opportunities in retail coming around kind of post-pandemic. We grew during the pandemic because we were able to stay open and people needed a sense of normalcy. And so we really see if something like that happens in the future, we are still able to be able to operate, grow revenue, and be able to generate. But we also have the flexibility if something comes our way where we can pivot into the wholesale, pivot in the direct consumer. So we're not losing any revenue source if something happens. Again, we have that flexibility and adaptability, which is huge for us. Next slide. A little bit about the competition. There's some local plays here, but also nationwide brands in terms of everyone's familiar with Starbucks, Dutch Bros, Blue Bottle. There's been a lot of M&A activity going on here in the coffee space for the past 5 years. And so we really see the next 3 to 5 years as the opportunity to be acquired by a larger publicly traded coffee company that needs more of a regional health and wellness focus. And so that's where we've kind of been identifying and looking at potential suitors over the next several years. But we really hit all these great wickets that some of these other coffee companies don't. And so by providing that niche, we can really expand the market share for some of these companies and really kind of add value to them by adding also value to our customer base by being organic, veteran owned, and really work on this experiential side of coffee shops, which is huge. Starbucks has their reserve shops. And we really see that being very important for a lot of people to kind of come in and enjoy themselves and not focus on the transaction, but focus on the experience is what we do. Next slide. A little bit about our seed round. We are raising $2 million. We've secured already 30% of that. So we're looking to close out. We are in talks with a few strategics right now to take a majority of the rest of the round, but we are raising to open additional tasting rooms, expand our distribution market footprint into Sprouts and then Whole Foods in the Southern California market, and get ourselves to the Series A in the next about 30 months. And so this is where we plan on using the funds to continue to grow into that strong regional player over the next 5 years. Next slide. And a little bit of the financial forecasting that we've gone through and hit. Utilizing the seed round to continue expansion and growth, and then the Series A in the next few years to continue getting into the $12+ million in annual revenue. Next slide. That does it for the presentation. I really appreciate everyone's time. I know it's a long day of hearing all these pitches, but I'd love to chat with anybody who has further interest. Here's our contact information, and also iCFO has any information as well. Thank you so much.
Eric, thank you for that great presentation. I really enjoyed it. We do have some additional minutes that I'd like to share with you, and maybe you can kind of, if you want to focus on something that, regarding the presentation that you like to touch on.
Yeah, I think the biggest thing that's obviously very hard to show in a presentation is the craft aspect that we operate. A lot of the coffee companies that do ready to drink coffee are using co-packers, and there has been a huge log jam in them for the past year and a half. Some of the capabilities from the co-packers are being diminished. They're only really paying attention to the very, very large customers. And so for growth and expansion for some of them, it's going to be a bit of a challenge unless you're the Starbucks of the world. So for us, we really take this craft component to it. And we've seen the success of that in the craft beer industry over the past 20 years with a lot of M&A activity in the craft beer world. And so for us, maintaining that approach to being hands-on with the sourcing of the coffee, the roasting, the brewing, the packaging, it gives us a lot of flexibility and options to go. And we have everything dialed in where it's not a whole lot of capital expenditure to continue to grow and triple, double, 10x our production capacity. We've got a very good proprietary method that we use. It's very simple to scale, but we really take a really good approach to really paying attention to the quality of coffee we're using, the quality of water, and just the packing methodology too, to make sure we can expand and grow, but not overextend ourselves like some people have done using co-packers where they can't keep up and they go out of business. So we've really tried to focus on controlling what we control and providing the best quality product out there.
Thank you, Eric. It seems that you got all the bases covered. Thank you for your great presentation. We look forward to speaking with you at the virtual booths, and I do have some information for our viewers. The conference is scheduled to end approximately around 4 p.m. There will be a networking session with entrepreneurs and investors using the virtual booths immediately after the last presentation. And for those who have any questions regarding the event, there will be a virtual booth, an information booth where you can assist at any moment. Additional to the virtual booth, we do have a virtual lounge that you have access to at any moment by clicking on lounge in the submenu. So now let's move on to our next presenter, which is Nutter. Welcome us is Alicia Long, the co-founder and CEO of the company. Alicia is a Chinese immigrant who graduated from the Ohio State University with a marketing degree and previously worked at Google, Amazon, and a number of tech startups. Nutter is a consumer tech company and creator of patent-pending Nutter Machine, a signature product that makes plant-based milk at the push of a button. Along with Nutter Blends, leveraging consumer data regarding their lifestyle, dietary preferences, and goals through online personalization, quizzes, and proprietary algorithms, and then offering them tailored products via subscription. Alicia, the floor is yours.
Thank you. Can you all hear me okay?
Good. Mhm.
Yes, Alicia, please go ahead.
Okay, great. Apologies, I have my earbuds has failed on me. So, sorry if there's any like noise in the background. But hi, I'm Alicia, and I'm the co-founder and CEO of Nutter. We are a consumer tech company focuses on changing the way we milk. Next, please. So, over the last few years, we have a lot of consumers have switched from dairy to plant-based milk on a day-to-day basis. Now, biggest problem is the preservatives in those store-bought plant-based milk. This is a very typical picture that you see from any store-bought plant-based milk packaging that you see. Basically, a lot of ingredients you cannot pronounce, a lot of preservatives, additives, emulsifiers, gum, and added sugar. Those are not what your body's supposed to take, and it creates inflammation long-term. So it's not as healthy as advertised. Plus, it's not very sustainable because none of these milk cartons are recyclable. So 17 billions of milk cartons get thrown away in the landfill every single year. So we're on a mission to change that. Next, please. So here's our solution. Basically, what you see here is a plant-based milk maker, and it does make any type of plant-based milk, almond milk, oat milk, soy milk, you name it, we can handle it. because it has proprietary technology, including the heater as well as filtration. So it blends and heat and filter all at once. All you need is almonds or nut of your choice and water. And within a couple of minutes, you have clean and nutritious plant-based milk. And what you see on the right-hand side is another blend that we just launched. So that is a subscription-based offering for our existing customers. So basically, you'll get everything in a box, whether you need almonds or oats or vanilla or chocolate flavor. You will have everything in a subscription box to create your own personalized plant-based milk. Next, please. So we launched in July of 2021, and within just a little over 20 months, so we've done over $10 million in total gross revenue. Current run rate is $16 million, and then MSRP is $169 to $189 for the Nutter machine, and Nutter blends is $59 to $89 per month. So let's say if you drink 1 carton of milk per week, your annual saving is actually going to be $200 per year. So in this economy, we're definitely helping customers to save money. Next, please. So we've been on a couple of press media. Shark Tank is the most recent TV presence that we have. And also we've been on Forbes, Good Morning America, NBC Today Show, Wall Street Journal, just name a few. Next, please. We've gotten a number of big retailers, for example, Sur La Table, Williams-Sonoma, most recent is Target, and as well as Starbucks, and they're going to start selling across all of their reserve stores. We're in negotiation with Costco, and we actually just went live on Macy's.com today. Next, please. So here's our milestone. In 2021, we launched another machine. In 2022, we actually worked on, based on our consumer data, we completed the R&D for Nutter subscription product offering, which is Nutter Blends. And in earlier 2023, Q1, we launched Nutter Blends. So this year, we're actually launching, we're adding a few SKUs to the hardware, which is family size as well as commercial grade plant-based milk maker that we're going to service food services such as coffee chains, restaurants, hospitality. So in 2025, we're looking to expand, rinse and repeat our success in the US and then expand to globally. Next, please. Expected growth. So very much J-curve. In 2021, within 5 months, we did $900,000 in gross revenue. Last year, we closed the year at 6.9 million. And this year, we are looking to do approximately $15 million. And then next year, we're looking to complete about $50 million. And then in year 2026, we're looking to complete $300 million top line growth. That is only about 10% of market penetration. Next, please. So we have a great team. We have a team of experienced executives. All have done successful exits in the CPG world. And also we have executive come from Nespresso, Nestle, and Abbott. A couple of our advisors on the right. So we have Ashim Parikh. He's currently executive at PepsiCo, and he was part of the merger and acquisition for SodaStream. He believes that company is going to have the SodaStream-like $2.7 billion exit. And then a couple other advisors being in Alexa Fund, a lot of hardware experience. Ronak has a lot of experience in subscription. Also, the most recent advisor and investor is former CEO at Instant Brands. When he was there, and they actually did about over $1 billion in annual revenue for Instant Pot. Next, please. So currently we're raising $3 million for our C+ round. It's convertible note, 25 million pre-valuation cap, 6% interest with 20% discount. And the primary use of the investment is in sales and marketing, increase marketing efficiency, also increase the operations efficiency, build out more distribution points, as well as hiring and product R&D. Next, please. So in a nutshell, it's Nutter. We are set out to change the way we milk for a better future. Thank you.
Thank you, Alicia, for that great presentation. Alicia, we have a couple minutes left over. Anything that you may want to touch on specifically?
Other than I think this round is relatively quick compared to our last round. So, the reason why we wanted to, be able to complete the bridge round is because we're taking on Target as well as Costco as a bigger clients. So each of them is gonna, contribute to a major, pretty large pipeline of sales. So that's the reason why we wanted to extend our run rate. So this raise will be giving us 24 months of runway, and then be able to help us to scale this year.
Very good. Well, I think it's an excellent product, Alicia, and I think it's very well coordinated for right now, the time that we are. So I think it's being very well received by the consumer.
Yep. Yeah. So definitely, the timing is now. We're not in the market to teach or to educate customers to drink oat milk. I think we're in the market to educate customers that there is a better and healthier way to drink plant-based milk. And the fact that Starbucks has making the move of switching the default milk option from whole milk to oat milk. So is Blue Bottle. So I think that is the indication of the market is pivoting. So we're definitely moving away from the dairy into more of a plant-based milk. So since the pandemic, there's a lot of consumers are very conscious about what they drink, what they eat, what they consume in their body. So we wanted to provide the transparency in the foods. So plant-based milk being a big part of people's diet, like a lot of people use it for coffee, for cereal, for protein shake, for baking, for a lot of stuff. So as a global market, by 2030, it's going to be a $30 billion market. So it is definitely a big market. We're looking to be a market leader in this space.
Very good. Thank you, Alicia. Appreciate your time and your presentation. And we look forward to speaking with you at the virtual booths at the end of the presentations.
Sounds good. Thank you.
Thank you. Let me give you some information before we move on to the next presenting company. Again, I want to invite all the investors to please visit each presenter's virtual booth for further discussion. The presenters will be able to answer any questions that you may have. And after the last presentation, you can click on Exhibitors, select the booth, and click on Connect to meet them live. And if anyone missed the presentation, there will be a video replay of the event in the auditorium. So let's move on to the next presenting company, which is Coder. Joining us is Cecilia Han, the founder of Coder. And Cecilia is an award-winning two-time founder with a passion for teaching kids to code. She started her first venture, Coder Kids, in 2016, teaching thousands before leaving in 2019 to solo found a company in South America. And she is now in the early stages of her next venture, Coder. And Coder is an after-school coding studio for kids, grades from kindergarten to 8th grade, that offers a self-paced tutor-guided curriculum such as Minecraft modding, mobile app making, and artificial intelligence, and an opportunity to compete in global team competitions. The world-class computer science education and Coder Network inspires children to lead in a rapidly innovating world. Coder is in the pre-seed stage with plans for the flagship studio in San Diego, California. Cecilia, the floor is yours.
Thank you so much, Robert, and the entire iCFO team today. I'm really thankful to be here and really excited to talk about Coder. And so Coder is an after-school coding studio for kids, grades K through 8. And let's go ahead and chat a little bit about what that means. Next slide, please. So here's the current state. Schools are solving last generation's problems, meaning the problems of yesterday are the ones that are getting solved in schools. Meanwhile, technology is constantly shifting the way that we work. So what do we want to do about it? Let's go ahead and go to that next slide. Coder. So Coder is an after-school program for kids K through 8 that prepares the kids for the future. As you see, what we will do is we'll be bringing the product mentality into a brick and mortar concept. Next slide, please. So let's talk about the landscape. There's two competitors, which really wouldn't even consider competitors at this point, just because it's so different. Code Ninjas of the Coder School provide at a holistic level something that Coder also provides. After school coding studio for kids, providing kids a coding education for them to learn these skills. However, how Coder differs is the following. We have our rapid product release cycles that completely changes the way that we're able to understand our kids' needs and able to make sure that we're meeting the market where they're at. I'll give you a couple of examples here from this. The first one is related to our curriculum. Code Ninjas in the Coder School, what they provide is being able to say, hey, at a basic level, we're here to teach kids either video games or we will customize it depending on each child. This takes time and energy and it doesn't really meet the market. What we're doing is we're saying, yes, we have that need and we will do that, but we will also be able to bring in AI, machine learning, cryptography. Yes, our 12-year-olds will be learning Caesar ciphers and they will have a blast doing so. In addition to changing the operations of our business. So for example, instead of just providing these self-paced classes, we will have coding competitions where they'll be able to come in and compete as a team. So we're not just solving the problem of are they learning the right skills, but are they applying these skills too? Let's go ahead and go on to that next slide, please. And we've done it before. So meet Melina. She was part of our first project called Coder Kids that we ran from 2016 to 2019, co-founded this business. Melina joined Coder Kids with absolutely zero coding experience. In a few months, she published Aspicia, which is an Android app on the Google Play Store, where she was helping address a problem for kids with speech disorders. From there, by August 2018, she was pitching this app to a global audience in the Technovation Challenge. This is just one of the very examples that we've done this before. You see, the reason why we started the Technovation Challenge was because we were noticing that our girls were only 18% of our student base. And so we decided to hypothesize why and act on it very quickly. And what we realized is that our girls didn't just care about creating video games. What they wanted was to create an impact in their world. And so we looked and we found the Technovation Challenge, which is a girls-only program where kids can create a mobile application to solve a problem in their community, addressing that hypothesis, and it worked. Not only did Melina was able to really excel in her coding trajectory, but also we saw an increase to up to 33% of our kids were now girls in our program. This mentality back in 2016 to 2019 is what we want to bring to Coder in a very systematic way. So let's talk a little bit about how that would look like. Next slide, please. So first of all, I want to highlight here the market validation. You see, Code Ninjas, which is not even close to what we're going to be able to deliver, has been able to scale to 500 plus studios, and they have been recently acquired in 2021, meaning that demand is there. We just need to be able to fill it. Next slide, please. And the market size shows that. So right now, it's about 25 million kids in the area where they're ages 5 to 13, so K through 8th grade, with families with disposable income, of which about 65% participate in after-school activities. That gives us about 16 million in terms of our total addressable market, which, next slide, please. I know that TAM is very on the low side. However, 2,200 represents our annual recurring revenue for per student, which gives us a $35 billion opportunity per year. That's something to be very excited about. Next slide, please. So how will we get it done? The first thing that we want to make sure that we understand is how to really understand this product-driven cycle and iterate on it. So we want to be able to open 3 company Go studios to be able to be ready to franchise across the country. This is what those numbers look like. 2,200 represents the average annual revenue per student. 450 is our student capacity per studio. This means that now 450 kids can't enter into one time, but that's the amount of memberships that we can have to support our studio given our capacity. Times 3 studios in operations represent a $2.97 million in annual recurring revenue potential. The beautiful part about this business is that it is a very high profit margin of up to 48% for corporate-owned studios. That gives us a $1.43 million in annual recurring revenue for 3 studios. Next slide, please. But let's talk about growth. So phase 2 is going to be about expanding to 542 Coder studios by 2030. We're hoping to, again, these first 2 years really drive down on product market fit and making sure that we have that franchise playbook up to speed. And then from there, we want to grow as quickly as possible to achieve 500 plus studios by 2030. Next slide, please. So what does the revenue projections look like for franchise owners? Well, they pay a 12% royalty fee and upfront fee. For our calculations, I have excluded the upfront fee because there's negotiation, things, we don't want to look at that. We want to look at that recurring revenue. If we're assuming an average annual royalty fee of $60,000 per year per franchise, a studio times 542, which is our goal, that leaves us $32 million in annual recurring revenue by 2030. That's something that we're really excited about and we know that we can do. Let's go ahead and go off to that next slide. So what do we need? Well, we need 1.7 million to be able to do really three things. The first is hire two key hires, our head of curriculum and our head of marketing. Our head of curriculum is going to be the one who is going to be driving the curriculum for our kids. And our head of marketing is not only going to be responsible for branding and things like that, but really getting us ready to franchise, to understand that market so that we are ready to go by the time we have those 3 studios. The other part is making sure that we can open 3 studios, just that upfront cost of doing that business, as well as legal and licensing fees that we know are necessary in order to get a franchise off the ground. Our pre-money valuation is at 3.5 million, and what we'd like to offer is 30% equity for our company, plus a 3.5% revenue royalty, which we see on the next couple of screens here, how that's reflected as a return on investment to our investors here today. Let's go ahead and go on to that next slide. So this is what it looks like. Here's our exit strategy. We believe by 2030, we will be able to go ahead and exit. Now, there's a couple of things that I want to highlight here is that investor payout, which is at 3.5% royalty fees. So that one is just being able to share with our investor as we're growing. We want you to be able to celebrate with us as well. And there's also that 30% equity acquisition there at the end of 2030. The other part that I want to highlight is the gross margin. Notice that in the beginning, it is 50%, 48%, which represents the fact that we have most of our studios being corporate owned. But as we grow and it becomes more franchise owned, we're looking at a 77% profit margin. That is very exciting for our business. Let's go ahead and go on to that next slide. So why me? I'm a solo founder. Already I know that that's something that's a risk, but here's why. We've built this business before with Coder Kids from 2016 to 2019. I know how it works. I know these kids and I know what is necessary to make it expand nationwide. And the second part is before at Coder Kids, I didn't have this big tech experience, but now I do. I'm currently building a 0 to 1 product in Tala where all that we do is experimentation, where we're driving 10x growth for our customers, as well as leading growth in a Farmstead, which is a grocery AI startup. And lastly, compliance. I know most of the franchise world is all about legalese and making sure that that works. And that's not something I'm afraid of. In fact, I love it. I say bring it on because it's something that I have experience with at my current company, Itala, and then also in my current private venture in Chile. So thank you very, very much for your time. I'm really excited to be able to kickstart Coder and hope that you join me. Thank you so much.
Thank you, Cecilia. I really enjoy your presentation. Really, you're doing something great with kids, especially after school activities. They're very productive. Definitely wish you the best. And please stay for our virtual booths at the end of the last presentation so you can network with investors and other entrepreneurs. And I just want to provide you with some information before we move on to the next presenting company, that there will be a networking with entrepreneurs and investors using the virtual booths immediately after the last presentation. And for those who have any questions regarding the event or how the virtual booths work, there will be an information booth available where we can assist you at any moment. Additional to the virtual booth, you will be able to join a group networking session at the virtual lounge simply by clicking on lounge in the sub menu. So let's move on to our next presenting company, LifeBridge. Let's welcome Mr. Thomas Boyd, the president and CEO of LifeBridge. Thomas is an experienced business manager and technology leader with 18 years of large enterprises and 18 years of startup experience. Thomas was an executive in Siemens AG with 25 plus years of experience in medical sensor technology and numerous medtech product launches as digital healthcare digital hearing aids, molecular imaging, and the world's first digital hospital in Vienna, Austria. He is the holder of 28 issued patents in medical devices, pharmaceutical, forensics, and imaging technology. LifeBridge is a Pittsburgh, Pennsylvania-based company started in 2018 for the purpose of developing and commercializing remote patient monitoring healthcare solutions. Their primary focus is in the home healthcare and long-term care market, specifically for professional care providers. LifeBridge has filed a non-provisional patent, US and PCT, and will launch the medical device in Q4 of 2023. Their FDA-registered medical device will automatically measure vital biometric data and integrate these with medical grade data into patients' EMRs. Thomas, the floor is yours, sir.
Okay, can you see me? You have
Yes,
to
sir.
allow me to make a picture of me, or that I'm in.
There you go, sir. Please go ahead.
Okay, now you can see me. Yes. So thank you very much, Robert, for the introduction. We are a data management company. And that means we built also a sensor ring to control future applications like diabetes, seizure, sleep apnea. And I will come to this, why we have hardware, firmware, and software. So this presentation is especially for healthcare investors, and I hope you wake up and listen what I can show you for the future. Next, please. So let's start with the market. We know healthcare, we are spending trillions of dollars and the population got not healthier. We have high costs and financial inefficiencies. And although that we started 20, 30 years ago, digital healthcare, we are still in manual charting time and inaccuracies. And we have to improve personnel retention. What we offer is a SaaS business model, and I will explain this later, what that means. So SaaS stands for service, for software as a service, and I will come to this. And the ring is an all-in-one medical device. The API integration for automated charting is included, and also a task automation plus a portal that you can focus on which residents or which clients needs help first. So what we are looking for is an investment in this year for 1 million and in the next 2 years for 5 million. Next, please. So the market is a multi-billion-dollar market, and our focus on the addressable market is on the 15,000 long-term care facilities and the 12,000 home health care agencies. And if you have their reputation, we are looking order to go into the hospitals. Our goal is in the next 2, 3, 4 years that we get 2% of the accessible market. Next, please. So to see the competitive landscape, I divided the market in consumer market, what you normally see as the Garmin, the Apple, the Google, and clinical market, where the big companies normally in, but they specialize that you have for one application, one medical device. So we are focusing in the medical grade data and in the clinical market, but we have 13 biometric measurements on a medical ring, a medical device that goes with one software all in one. Next, please. So the journey was that we would like to go in a patient monitoring 24/7 and full automatics that you have data available in real time. And what we learned also, and from my experience as a Siemens retired executive in the power industry, there you see a portal where you have all the valves, and before a valve goes into a critical situation and needs service, you are aware about this. In medical, we do not have this at the moment. So, and what we are getting now is a Gen 2 ring in June 1 and 2 here in Pittsburgh, we presenting this to our space headquarter. We have here all the space activities in Pittsburgh. So next, please. So these are from the ring Gen 2. That is a much smaller ring than you saw before. That we have 13 biometrics. And due to that, we are measuring with modern sensor technology direct through your finger and the arterials. We have the opportunity to see in real time medical grade data like blood pressure, blood oxygen, the heart rate, the stress factor, what we call the heart rate variability, and a lot of other things like temperature and also the ECG. Next, please. So that is a portal. So important is that you have anomaly notification, that a doctor or a nurse can see immediately who needs help first. So, and it's ridiculous today that you think we are living in a digital world, but a nurse still measures 3 times for 2 minutes a patient manually, and that could be full automatic. And due to that, we have a medical degree data. We can go over the API charting direct into the patient's or in the resident's electronic medical record. Next, please. So we have the patent, as Robert said, although, so we have a trademark, we have the international patent. So that is all covered. And it's very important. I said at the very beginning, we are a data management company. We have also protected sleep apnea, diabetes, seizure applications. And that's exactly the reason why we have the ring developed, because otherwise we cannot control how we creating the data, and that we really have medical grade opportunities here with the FDA approved. Next, please. So we are at the moment in Q2. We are ready. We presenting by 1st and 2nd June, the 2nd generation of the ring. And we would like to go into the pilots. And that's exactly the reason I would like to have investors seeing the opportunity here to go with predictive analysis and preventive care into the future of healthcare. Next, please. So as I mentioned, 15,000 facilities only in the US, and you hear my accent. I'm from Germany. So we plan 760 facilities in the next 5 years. That are approximately 200,000 rings. So think about the data, what you get. These are millions of data. And in 1-2 years, we also want to go to Europe and have then a much more global opportunity. Next, please. So what is important to understand also that we are automating all this. You will get the reimbursement, but you have additional time to go to the need of a patient, what is not a standard. So you can focus much more on the higher reimbursements, what will be additional. Next, please. So due to the pandemic, you know, maybe chips and other materials were skyrocketing in the price. But the SaaS model, what I mentioned at the very beginning, so software as a service is a really profitable business because you make a 3-year contract with the facilities and you know every month the money is coming in and you take care of all the data. And this amount of data will help you to go to a predictive analysis and have much more opportunity to establish a preventive care. Next, please. So we are, I know you would like to have that, my office is in San Francisco, but it is not. We are in Pittsburgh and we have here all the manufacturing, the software in Pittsburgh, and we have all the partners like Secure Telehealth for the home health care. Next, please. You can see here that in next year, as soon as we are in the market, we will have, due to the SaaS model, a profitable business. And in 5 years, we're expecting approximately an EBITDA of $60 million. Next, please. The investment we are looking for is for sales, marketing, payroll, then the manufacturing and inventory, and the 15% is especially for the clinical trial, what we will go to next year. Next, please. So for exit strategy, I only want to tell you we are going in the efficiency and the API integration, and you see these mergers are in the multi-billion-dollar. Next, please. We have an excellent team, and I have this here. And next, please, we are running a little bit short time. So I would like to see, we have also an advisory team with doctors and manufacturing and with the telehealth. And in the next place, the last one is why you should go with us. So, and I think very important is really, we have the hardware, we have the software, we have the patent, and we know that with the FDA, we will go into the future. And the SaaS business model is profitable. And if you invest, I can promise you that is a great investment. Thank you very much.
Thank you, Thomas, for your presentation, bringing all that energy to your presentation. Please don't forget to join us at the virtual booth at the end of the last presentation. And I do want to share some information before we move on to the next presenting company. To the investors, please visit each presenter's virtual booth for further discussion. The presenter will be able to answer any questions that you may have. After the last presentation, you can click on exhibitors, select the booth, click on connect, and meet with them live. And if anybody missed the presentation, at least the live presentation, there will be a video replay of the event. For those who were not able to view it live, you will have the opportunity to see it here at the auditorium. So let's move on to the next presenting company, WheelTug. Let's welcome Isaiah Cox, founder and CEO of the company. Isaiah is the CEO and founder of WheelTug, and he has been responsible for bringing the company to where it is today. From patents and concepts through the technology development, airline customers, and FAA certification work. WheelTug, by saving 7 to 20 minutes for each commercial aircraft on the ground, as well as fuel, engine wear, congestion, delays, etc., WheelTug seeks to transform airline ground operations. The goal is to add 10 to 20% throughput to $1 trillion business. Isaiah, the floor is yours, sir.
Thank you very much. Thank you, everybody, for your time. There should be a video that starts. Right. So what you're about to see here is something that you've never seen on an actual aircraft. When you get on board an airplane today, you get in your seat, doors close. How much time elapses between the closing of those doors and the driving forward of the aircraft? The answer is that it's typically somewhere between 8 minutes and 20 minutes or more. The video seems to have stopped.
Yes, we're going to replay that for you, Isaiah.
Try it again. Our product is something that actually has to be seen. Right, take it back to the, that's great, thank you very much. So there, now we can see the aircraft driving. So this is the WheelTug system installed and operating at Memphis Airport in the summer of 2020. The WheelTug system is an onboard electric motor inside the nose wheel of the aircraft. It allows the airplane to taxi backward and forward without using the engines, without using a pushback tug, without using the pushback crew. And the net result is huge because we can go from doors closed to taxi forward in 1 minute or less every single flight. The only reason we fly is to save time. We don't fly because we love the food, the TSA, the seats, any of that. We fly because it's the fastest way of getting from one point to the next. WheelTug makes flying faster by reducing the amount of time that is spent on the ground in between every single flight. Slideshow, please. Next slide, please. So in a nutshell, the wheel tug looks like a pretty simple thing. And in some respects, it certainly is. We get rid of all of those people you see on the left-hand side. We get rid of the tug, and we replace it with a system that is very small, fits inside the nose wheel, and flies with the aircraft. But what does this mean? Next slide, please. The wheel tug system, by eliminating the pushback tug, the pushback crew, by saving all of that time, allows us to use the engines much less on the ground, which of course is great for fuel as well as CO2 emission reductions. By reducing the turnaround time, we add to aircraft utilization. And utilization is the name of the game in this industry, as in most. If you have equipment and you're not using it, then you can't make money on it. Similarly, by having more aircraft movements per gate per day, we add considerably to airport throughput. And this is also a holy grail in the industry. Anything that allows for more passenger travel without building another runway or more taxiways or more gates is a huge win for airports. Similarly, because the engines are off, the pushback crew is eliminated, we improve safety considerably. Today, the ramp is a very unsafe environment, and it's high time that it was updated. Next slide, please. We also, from the green perspective, wheel tug is the single most salutary solution to the urge to make aviation more sustainable and more environmentally responsible. Because wheel tug, by keeping the engines off on the ground for a much longer time, allows us to save on ground emissions as well as considerable amount of CO2. It's about 31 kilograms per engine minute, and we save 7 to 9 minutes of engine time every single flight. Compared to other things that are done, which are not competitors, they're simply parallel approaches. Optimized flight routes already are happening or have happened, and SAF adds cost. E-taxi, wheel tug, which is e-taxi, reduces the cost for the system. Next slide, please. The system has been in development for quite a number of years, and along the way, we have got 140 issued patents. We have another 50 plus patents pending, which is very significant. The reason why we have so many patents is because what we've achieved has actually never been achieved before. It is very difficult to do. If you look at my head, you'll see that there's an elephant pulling an aircraft behind me. This is from a classic image from the 1950s, where they moved aircraft occasionally with elephants. The joke has long been that it's impossible to fit the elephant inside the nose wheel. And that's exactly what wheel tug has done. We have our motor and system inside the nose wheel of the aircraft that allow us to do all of the job of moving the aircraft on the ground, replacing the proverbial elephant. We also bundle a camera system on board the aircraft. Next slide, please. We have signed 26 airlines, over 2,666 aircraft in our order book around the world, primarily in Europe, Asia, some in Africa, some in South America. We have a lot of demand for this product. Airlines like it. Next slide, please. We've also deepened into certification. Our certification basis with the FAA was agreed in 2016. We have components being certificated also in Europe. Bilateral treaties will give us global coverage. We work with Eurocontrol and European Union for becoming part of the roadmap of the industry going forward. And we've done very well with that. We've also conducted and are conducting feasibility studies with airports, which have concluded in the case of Mumbai Airport that we will add 2 to 3 flights per gate per day to gates that currently manage 8 flights a day. Slots at Mumbai sell for millions of dollars. Wheel tug adds over 30% throughput to the capacity at Mumbai Airport. That's a huge, huge value. Next slide, please. Wheel tug has built a comprehensive supply chain. Ultra, for example, is a multi-billion-dollar company owned by Advent. Sterling owned by Explio. ATI is ATI Allegheny in the Midwest, who forge our titanium wheels, and the list goes on. We have a world-class team of suppliers and partners, risk-sharing partners, for the development and the entry into service and production of the wheel tug system. Next slide, please. Our team is also similarly very experienced and world-class. Just to take a few names, Jan Vanya there, seen second from the left, used to manage part of Czech Airlines. He also managed the largest business jet operator in Europe at the time. Jack France was manager of all of quality for Honda North America. He managed all of their powertrain as well as their automotive parts and later on their aircraft in the GE engine program. Alex Froes was responsible for all ground and flight tests for the Embraer E2 jet, so the most successful commercial certification in recent decades. It's a fantastic, fantastic team, capable and driving forward. Next slide, please. We have a factory here where I am right now, Baltimore, Maryland. It's a 38,000 square foot facility capable of outputting all the ship sets we need for Wheel Tug Systems, but also holds within its walls our development and in-service support laboratory, logistics capability, kitting, and the rest. But its primary task is as a final assembly line for the Wheel Tug Systems. Systems will be installed on aircraft by shipping them from the factory to the local hangar, known as an MRO, and then the local hangar operation for wherever the aircraft is does the installs on the airplane. Next slide, please. Wheel Tug is alone in being able to service existing aircraft with onboard solutions. Saffron Green Taxi, which is just to the right of us there, is promised for the next generation of aircraft, which are not expected to start before 2035, giving us a market of over 25,000 airplanes that we can exclusively supply Wheel Tug systems for. The Green Taxi solution is on paper, that we have not seen any hardware or test from them. And the rest of the would-be competitors are essentially legacy systems that are ways of moving aircraft today that don't save any time and don't unlock that kind of value. Next slide, please. From a corporate perspective, we have raised and spent $91 million to date, 41 million of it in cash, 50 million in kind. We are in the middle of doing Series B work, but we continue to raise money as we roll. Our business model, very importantly, is equipment as a service. Wheel Tug will generate savings that well exceed $1,000 per aircraft per flight, which represents millions of dollars in savings per aircraft per year. For the 2,000 aircraft in our order book, that represents $3, $4, or $5 billion in gross earnings to the company every single year. And the overall market, as I said, is about 15,000 airplanes growing to 25,000. Next slide, please. We already have pledges matching funds, about $30 million, waiting for a lead investor. We're under discussions with such a lead investor now, and that's a raise of somewhere between 30 and 200 million total. We can gainfully spend in that range. There's a window of opportunity for those who would like to invest either in Wheel Tug, the parent, or in the manufacturing company, as you see there on the right-hand side. But this is essentially an opportunity to bridge, and we're offering attractive terms because we want to drive forward with entry into service as quickly as we can. Next slide, please. So there are links on this slide. You probably can't see them, but we have maneuvers from Test Drive. We have coverage from Captain Joe and others on YouTube. We talk about Wheel Tug to the industry and outside the industry on a regular basis. And we have everything from third-party studies, audited financials, and we have a very active shareholder group that stays fully informed and helps advise the company. We are going to transform commercial aviation. Wheel Tug stands to add 10 to 20% throughput to what today is measured as a $1 trillion a year industry in ticket sales and loyalty points. The opportunity to add 10 to 20% to a $1 trillion a year industry is an opportunity that we have not seen matched anywhere else. And I'd love for you to join us. Thank you.
Isaiah, thank you very much for your presentation. Very interesting. I'm sure we're all looking forward for the airlines to implement your technology very soon. Please stay for the end of the event. At the last presentation, we will have our virtual booths where you can network with the investors. Also, I want to remind everyone that we do have an information booth available where you can we can assist you at any moment with any questions or anything that you may have any questions on. Also, in addition to the virtual booth, you will be able to join a group of networking session at the virtual lounge. And this is by simply clicking on lounge in the submenu. Now, let's move on to our last presenting company, which is CatchGPT. Let's welcome Alvin Liu, the founder of CatchGPT. And Alvin is a software engineer, leader, and technology enthusiast from developing web and mobile applications to deep learning and blockchain research. He strives to always stay on the cutting edge of technology. He has 5 years of experience wearing many hats as a full stack software engineer at various early stage startups in Silicon Valley in California. Alvin has managed software contractors, architected the product, and made significant contributions to the code of the CatchGPT app thus far. Please welcome Alvin Liu. The floor is yours, sir.
Thank you. Hello and welcome, everyone. My name is Alvin, founder and CEO of CatchGPT. Our name is a pun on ChatGPT, and I'm sure we've all heard almost too much talk and buzz around the topic of ChatGPT and LLMs like it, large language models. Today, we have a variety of large language models in the field, such as Microsoft's recently acquired GPT-4, that's in Bing. We have older models like 3.5, that's what's running on ChatGPT. And we have Facebook coming out with Llama, and we have Google competing with Bard. And so there's just a lot of buzz and news around large language models. And I think with every great leap forward in technology, there comes alongside it a host of problems. So large language models are incredibly useful for human productivity and search ability. But the thing is, the content they write is sometimes good enough in the human eye to pass for human written these days. And this is a major problem when it comes to cases like academic dishonesty, or what's also been a big discussion in the tech space is verifying human users, like that blue verified check mark. How do you do that, especially when you're going to have a large quantity of automated bot accounts using large language models to post on social media? So that's why this is a problem. But let's go over why I decided to build it in the first place. The story goes basically, I was mindlessly scrolling on LinkedIn, which is the only social media I allow myself to use because it's productive. And I come across this post with, I want to say 50,000, 100,000 likes on LinkedIn. And it was this company claiming to be the first and best in AI generated text detection. And it's called GPT-0. So naturally curious as a software engineer, I decided to try them out, see if I could bypass their detection method. And within about 2 or 3 minutes, I was generating text that like 80% of the time that would bypass their detection schema. So this is not okay. This is not good. Even worse, I input human written text and like that I had written myself in college, and it flagged parts of it as written by AI. Which is a huge ethical concern because of this. Their product was originally targeted towards academia and catching academic dishonesty. And if that had been implemented while I was in college, I would have been caught for cheating when I didn't. So I thought this was problematic. And with my background in deep learning and natural language processing, I had to at least try and make a better model. So this was back in January of this year, 2023. About 4 months later of research and tackling the problem, I believe that I've created a better model. So I'm proud to present to you today CatchGPT. We're currently in an invite-only closed alpha. Our primary goal is to collect metrics right now, but we are going to be moving into a possibly paid beta state with more users. But let's get into the meat of the thing. So next slide. So as I already outlined, new chatbots like GPT-4 are able to easily circumvent detection if prompted correctly. Our leading competitors, aside from GPT-0, include Hive moderation, which is a later stage startup. They also have difficulties catching AI text and human text accurately. And for now, a lot of our competition is aimed towards research and academia. Next, please. So the solution is obvious, right? Increase the accuracy and sensitivity of the software, easier said than done. Other solutions would be to increase visibility to businesses rather than just academia, because I know there are a lot of social media sites and forums out there who would love bot detection through an API. And to simply increase the accuracy and sensitivity, we just have to apply the latest technologies and adapt with the evolution of AI. And our model is coded in such a way that is very simple to scale to large throughput. Next slide, please. So it's pretty simple. You right now in our closed alpha, you just access it via our website. The mobile app's not out yet, but you can web access it on your phone. Just copy paste the text you want into the box to analyze, and it'll put out some opinions on whether it's human or AI. And I'll get into that in a second. Next slide, please. Our key differentiators is obviously we detect what our competitors miss. Speaking metrics, here's our findings so far. When data was collected for GPT-0 alongside our own analysis, GPT-0 only caught 60% of AI texts. And out of the 48 human texts that had GPT-0 data, they flagged 7 as AI, so the 17% failure rate. Obviously, this is a new space. Detection of large language models is evolving as fast as large language models themselves. We have an 83% accuracy, so a 23% increase on GPT, our main competitor, for AI written text. And we have a lower failure rate around 10 to 12%, which I believe is still unacceptable. I'm still working on the model to daily, and as we collect more data, it's going to be better. But as of right now, we have less false positives and we have more correct detection of AI than other leading solutions. We provide a holistic evaluation through cutting edge machine learning. What that basically means is I think I can get into the weeds of it at the break after this, at the breakout if you have more questions. But essentially, we're using large language models to fight large language models, fight fire with fire. It's future proof because, again, we are using the latest large language model technology to detect itself. So as these systems become stronger, hopefully the detection becomes stronger as well. That's been true so far because GPT-4 came out in the span of me starting. When I started, there was only GPT-3, and in between then GPT-4 came out. Our data does support that our GPT-4 accuracy is as high as our GPT-3 accuracy. And we are optimized for bulk detection, and there's no length limit on text to analyze. These are some things, constraints that our competitors may have. Next slide, please. Again, our product is very straightforward at the moment. I mean, it's going to just be paste your text in a box. We have some like quality of life features planned and an API for mass programmatic access by enterprise. Next slide, please. Some use cases I already covered would be to verify social media posts, catch cheating, but also possibly even authenticate works of arts or novels, and even to authenticate whether a resume or job offer you got was AI generated in spam. Next slide, please. And the obvious user benefits are you're going to be able to be more confident in whether or not these two in your findings of whether or not text was AI generated or not. We actually don't just give you a number, we give you 3 full almost short paragraphs of opinions on whether it is AI or human generated, because we are using a large language model. We are working on building that into a numerical metric, but I do believe that sometimes just spitting out one number is not exactly the best for interpreting results. And we have easy bulk requests. That's just a feature of how we built our API. Next slide, please. Yeah, so the technology behind it, as I mentioned, you can access it on web and mobile. We're going to make API access in the cloud for enterprise. So like if Twitter comes along and says, hey, I want to use your tool for detecting it, engineers on their end will easily be able to plug it into their moderation system. And we are always evolving and updating our natural language processing techniques in terms of catching AI. Next, please. So the market's super new. I mean, like there was no market for AI text detection before, large language models hit the market. So these are our projections. Some other helpful data might be that GPT-0 in March had 6 million web page visits. We estimate them to have about 6,000 clients, with each paying about $10 a month or so. So I'm going to guess their revenue is somewhere around 60,000 a month, like 2 months after launching. Just to give you a scope of where our main competitor is at. Next, please. Looking forward, of course, we could become the market leader. We could get small parts of the market cap. And like, I think worst case scenario, we still scale to a couple thousand users for niche case scenarios and earn a good amount of revenue. Next slide. Go to market. Currently, right now, it's invite only referral, and we're trying to become the ubiquitous premium AI detection service. That's how we would differentiate ourselves, through accuracy and testimonials. Next. Here's just like a quick roadmap to success. This is just our next steps in development. Next slide. And yes, we are asking for 250,000 for 10% of issued shares, majority going towards staffing and marketing. And we also need some money for development and infrastructure, such as servers. Next slide. These are our future fundraising goals. We intend to raise multiple rounds after this. Next slide. And yeah, the founders. Well, I think I'm out of time. So if you'd like to know more about the founders, please talk to us in our breakout room. I think next slide is the last one. Yes. So yes, thank you, everyone.
Thank you, Alvin. Very interesting. I know that AI is becoming more, we're using it more and more every day in our work, school, daily activities. So it is a concern. So I'm glad that there is an application that can help us out in that. Alvin, please stay for the virtual booth so you're able to network with other investors. And this concludes the formal presentations. Investors, please visit each entrepreneur at their virtual booth. They are looking forward to meeting and speaking with you. And in addition to the virtual booth, you will be able to join a group networking session at the virtual lounge simply by clicking on lounge in the submenu. On behalf of the iCFO team, we would like to thank everyone who attended today's event, and we look forward to seeing you at our next conference event in June. Till next time, thank you.